So how can you start creating multiple income streams? Start by looking at what you're good at and what you enjoy doing. Could any of those skills or hobbies be turned into a side hustle? Maybe you could teach online courses, start a podcast, or offer consulting services in your field of expertise. The key is to start small and be consistent. You don't need to quit your day job or invest a ton of money up front. Start with just a few hours a week and see where it takes you. As your side hustles grow, you can reinvest the earnings to scale them up or use them to boost your savings and investments. Tech-savvy investing, leveraging technology for wealth. Let's talk about how your smartphone could be your ticket to financial success. Remember when investing seemed like something only suits on Wall Street could do? Well, those days are long gone. Technology is shaking up the investing world, and it's opening doors for young people like never before. Think about it. You probably use your phone for everything from ordering food to finding dates. Now, it's becoming your personal financial advisor too. Investing apps are popping up left and right, making it super easy to start building wealth with just a few taps. And the best part? You don't need a fat wallet to get started. Many of these apps let you begin with as little as $1. That's right, for less than the price of your morning coffee, you could be taking your first steps toward financial freedom. But it's not just about making investing easy. These apps are changing the whole game. Ever heard of robo-advisors? They're like having a pro investor in your pocket, but without the hefty fees. These digital wizards use algorithms to manage your investments automatically. They'll spread your money across different types of investments to balance risk and potential returns. And the best part? They do it all for a fraction of what a human advisor would charge. Now here's where things get really interesting. Social investing platforms are turning investing into a team sport. You can see what others are buying, share tips, and learn from more experienced investors. It's like having a study group for your finances. You're not just investing, you're part of a community working together to grow their wealth. But hold up, before you dive in headfirst, there's something important we need to talk about. With all this tech making investing so easy, it's tempting to treat it like a game, and that's where things can get risky. Impulsive trading, buying and selling based on emotions or trending stocks can lead to some serious financial oopsies. Remember, just because you can trade with a swipe doesn't mean you should. Here's the thing, technology is democratizing investing, giving everyone a chance to grow their wealth. But it's not a magic wand. You still need to understand what you're doing. It's like giving everyone access to a professional kitchen. It doesn't automatically make you a chef. You need to learn the recipes, understand the ingredients, and practice your skills. So, what can you do to make the most of these tech tools? First, educate yourself. Many of these apps come with built-in learning resources. Use them, learn about different types of investments, understand risk, and get comfortable with financial terms. It might seem boring at first, but trust me, it'll pay off big time in the long run. Next, start small. Remember, you can begin with just $1. Set up automatic investments of small amounts each week or month. This strategy, called dollar cost averaging, can help smooth out the ups and downs of the market over time. It's like slowly filling a pool instead of trying to do a cannonball with your life savings. Also, don't put all your eggs in one basket. Diversification is key. Spread your investments across different types of assets. Many robo-advisors do this automatically, but it's important to understand why it matters. It's like not betting your entire allowance on a single number in roulette. You're playing it smart by spreading out your risk. Lastly, be patient. Investing isn't about getting rich quick. It's about building wealth over time. Set long-term goals and stick to them. Don't let short-term market swings freak you out. Remember, you're in this for the long haul. The social impact. Aligning wealth with values. You know how we often think about investing as just a way to grow our bank accounts? Well, it turns out that young investors are flipping that script. They're asking, what if our money could do more than just make us richer? What if it could actually make the world a better place? This isn't just wishful thinking. It's a real trend that's shaking up the investment world, and it's called social impact investing. More and more young people are putting their money where their values are, and it's changing the game. let's talk about what this actually means. Social impact investing is all about choosing investments that align with your personal values. It's not just about the bottom line anymore. Young investors are looking at companies and asking, are they doing good for the environment? Are they treating their workers fairly? Are they promoting diversity and equality? This shift is especially noticeable among millennials and Gen Z. These generations are actively seeking out ways to make their portfolios match their principles. They're not just talking the talk, they're walking the walk with their wallets. Here's something interesting. 44% of young investors say that aligning their spending with their personal values has actually made their financial decisions easier. It's given them more peace of mind about their money. Think about that for a second. By focusing on more than just profits, these investors are feeling better about their financial choices overall. But here's the really cool part. This isn't just about feeling good. It's about doing good and doing well at the same time. Young investors are using their financial power to support causes they care about, like fighting climate change or promoting social justice. And get this, they're not sacrificing returns to do it. In fact, research shows that socially responsible investments are often performing just as well as, or even better than, traditional investments. This is huge because it's encouraging even more young people to consider these options. They're realizing they don't have to choose between making money and making a difference. Let's look at some numbers to show how big this trend is getting. Since 2017, we've seen a 46% increase in Gen Z and millennials investing in stocks and shares. That's a massive shift towards more proactive investment strategies, including socially responsible options. Now you might be wondering, how does this actually work in real life? Well, let me tell you about a case study that really brings this home. There's a group of young investors who've successfully aligned their portfolios with their values. And guess what? They're not just feeling good about their choices, they're seeing improved financial outcomes too. These investors report feeling empowered by their investment choices. They're not just passive observers in the market anymore. They're actively using their money to support the causes they believe in. And that sense of purpose is giving them a whole new level of satisfaction with their financial decisions. But let's be real for a minute. This trend isn't just about warm, fuzzy feelings. It's about a fundamental shift in how we think about wealth and success. Young investors are redefining what it means to be financially savvy. They're saying, hey, we can build our wealth and build a better world at the same time. This is where environmental, social, and governance (ESG) funds come in. These are investment options that focus on companies with strong environmental practices, social responsibility, and good governance. And they're becoming increasingly popular among young investors who want to put their money to work in a meaningful way. Now, you might be thinking, this all sounds great, but how do I actually get started with social impact investing? Well, the good news is that it's becoming easier than ever. Many investment platforms now offer ESG options, and there are even apps dedicated to socially responsible investing. The key is to start by thinking about what matters most to you. Are you passionate about renewable energy? Look for funds that focus on clean tech companies. Do you care about workers' rights? Seek out investments in companies with strong labor practices. The options are out there. It's just about finding the right fit for you. The future of wealth, what's next? Think about it. We've seen how young people are shaking up the world of wealth building. But here's the thing. The financial landscape is always changing. What works today might not cut it tomorrow. So, let's talk about what's coming next and how you can prepare for it. Remember how we talked about aligning investments with values? Well, that's just the beginning. The future of wealth building is shaping up to be more diverse, flexible, and values-driven than ever before. And it's not just about making money, it's about making money matter. One of the biggest game changers we're seeing is the rise of new asset classes. Cryptocurrency and NFTs are reshaping how young investors think about building wealth. These digital assets are opening up new possibilities for diversification and growth. But they're not without risk, so it's important to approach them with caution and do your homework. The way we work is changing too. The gig economy is growing, and it's likely to keep expanding. This shift is giving young people more flexibility in how they earn and manage their money. Instead of relying on a single paycheck, many are creating multiple income streams. It's like having several smaller baskets for your eggs instead of one big one. Climate change and social issues are also playing a bigger role in how young people think about money. More and more, investors are looking for ways to grow their wealth while also making a positive impact on the world. This could mean investing in renewable energy companies, supporting businesses with strong diversity policies, or choosing funds that prioritize environmental protection. Technology is another major factor shaping the future of wealth building. Digital tools are making it easier than ever to manage money, invest, and learn about finance. From budgeting apps to robo-advisors, technology is democratizing access to financial tools and information. This means more people can start building wealth earlier and with smaller amounts of money. But with all these changes, one thing remains constant: the importance of financial wellness. A recent survey found that 61% of 18 to 35-year-olds are experiencing financial stress. The main culprits? Rising costs of living, job instability, and escalating housing expenses. These challenges are pushing young people to get creative with their financial strategies. So, what financial moves are working best for the under 35 crowd? Let's break it down. First, they're embracing side hustles and additional income streams. In fact, 41% of Gen Z and millennials say that engaging in side hustles has significantly boosted their financial wellness. And it's not just a passing trend. 31% are targeting side hustles as their top financial goal for 2025. Second, they're thinking ahead and focusing on saving and investing. There's been a 46% increase in US and UK 18 to 27-year-olds holding stocks and shares since 2017. This shows that young people are taking their financial futures seriously and starting to invest earlier than previous generations. Third, they're leveraging their tech-savvy nature to manage their finances more effectively. As of 2025, Gen Z's financial habits are expected to be heavily influenced by their comfort with technology. They're using digital tools for budgeting, investing, and managing their money in ways that older generations might find surprising. But it's not all about hustling and grinding. A significant portion of Gen Z is rejecting the hustle culture narrative. Instead, they're focusing on achieving a balance between work and personal well-being. This shift is influencing their financial decisions, leading to a more holistic approach to wealth building that takes into account quality of life as well as bank account balances. As we look to the future, it's clear that the path to financial success is becoming more personalized and diverse. There's no one-size-fits-all approach anymore. Instead, young people are crafting financial strategies that align with their values, lifestyle goals, and individual circumstances. Your wealth-building blueprint, taking action. You've seen the strategies, you've heard the success stories, but here's the million-dollar question. How do you turn all this knowledge into your own wealth-building reality? It's time to create your personal blueprint for financial success. Don't worry if it feels a bit overwhelming at first. Remember, every financial journey starts with a single step. Let's begin by taking an honest look at where you stand right now. No judgment, just facts. How much are you earning? What are your expenses? Do you have any debts? What about savings or investments? Getting clear on your current situation is the foundation for everything that comes next. Now, let's talk about setting some clear, achievable goals. Remember Sinia, Anita, and Cyan? Their success didn't happen by accident. They each had specific, personal targets they were aiming for. What's your big financial dream? Maybe it's hitting that first $100,000 in savings, starting a successful side business, or reaching a point where you can work because you want to, not because you have to. Once you've got your goals in place, it's time to choose strategies that fit your situation and values. This is where things get exciting. Maybe you're ready to take a page from Sinia's book and start strategically job hopping to boost your income. Or perhaps Anita's aggressive investing approach speaks to you. If you're feeling entrepreneurial, you might want to explore starting a side hustle like Cyan did. Here's something interesting to consider. 41% of young adults say side hustles are their top financial goal for 2025. That's a lot of people looking to boost their income and financial stability through extra work. Could a side hustle be part of your wealth building plan? Whatever strategies you choose, don't forget about the power of education. The more you know about personal finance and investing, the better equipped you'll be to make smart decisions. And here's some good news. 44% of young adults report that their quality of life has improved since they started focusing on financial wellness. Small changes in your financial habits can lead to big benefits over time. Now, let's talk about a practical tool you can use to manage your money, the 50-30-20 rule. This budgeting strategy suggests allocating 50% of your income to needs, 30% to wants, and 20% to savings. It's a simple way to ensure you're covering your bases while still setting aside money for the future. Another powerful tool in your financial toolkit? Automation. Studies show that automating your finances can help you save 3.8 times more money. Why? Because it takes the decision-making and the temptation to spend out of the equation. Set up automatic transfers to your savings and investment accounts and watch your wealth grow without having to think about it. Let's address something important: financial stress. If you're feeling anxious about money, you're not alone. A significant 61% of 18 to 35-year-olds experience financial stress, mainly due to rising living costs, job instability, and housing expenses. But here's the thing: taking control of your finances can help reduce that stress. In fact, 36% of people report less anxiety after creating a financial wellness routine. One area where many young adults struggle is preparing for financial setbacks. About 32% of people admit they don't have a clear strategy for managing money troubles. That's why it's crucial to build an emergency fund as part of your wealth building plan. Even small, regular contributions can add up over time and provide a financial cushion when you need it most. As you're building your wealth, don't forget about the importance of credit. Establishing good credit early can open doors for you later on. Consider starting with a low-limit credit card and always pay your bills on time. This simple habit can help you build a positive credit history, which can be invaluable when you're ready to make bigger financial moves. Remember, your wealth-building journey is unique. There's no one-size-fits-all approach. The key is to start where you are, use what you have, and do what you can. Every step forward, no matter how small, is progress. Now, let's talk about what really matters when it comes to building wealth. It's not about hitting some magic 100K number or following old-school rules. The game has changed, and young people are rewriting the playbook. Think about it. We've seen how job hopping, aggressive investing, and side hustles are opening up new paths to financial success. But here's the thing. These are just starting points. Your financial journey is unique to you. It's about finding what works for your life, your goals, and your values. The numbers don't lie. 44% of young adults say their quality of life has improved since focusing on financial wellness. That's what this is all about. Not just making money, but creating a life you love. So go ahead, make those smart money moves that feel right for you. Your financial story is yours to write, and it's time to start your own wealth-building revolution.